Good afternoon. It is June the 12th, about 2 o'clock p.m. and my trading was over many hours ago, so I decided to make a video about the pullback indicator. And what we're looking at here is we're in on demand on June the 6th, and this symbol is HOTH, H-O-T-H. On June 6th, HOTH was one of the morning gappers, and it pulled up greatly from like $1.80 to $3.90, somewhere around there. And I played this stock on market open, but I wanted to show you how this pullback strategy works. If you look down here, I have the custom volume label that I made. I don't have any volume bars. I'm not interested in them. I have the total volume, the current bar volume, the last bar volume, the pre-market volume, and the buyers and the sellers indicator right beside it. So this is really not buyers and sellers. What I like to refer to it as is if it's leaning more towards the volume on the buyer's side, then the green is going to light up. If the volume is leaning more towards the seller side, the seller side is going to light up. So these two indicators are actually finding the positive and the negative volume in the total volume. Up here you don't see it yet, but I have the bearish and the bullish spike percent, and it'll pop up later. And this indicator up here is strictly this one candle. It's always going to be the current candle on this indicator up here. This indicator is out of the total volume of buyers and sellers. So if you look, this stock opened in the morning around 7 o'clock. It started gapping up. And because of the pullback here, the indicator gave you a green arrow. The stock pulled up and then pulled back and fired another green arrow. The stock pulled up and pulled back right here a little bit and gave another green arrow. Pulled up, pulled back, another green arrow, and then it peaked over here during pre-market and started pulling back. From my experience, probably 5 minutes before market open, sometimes 15 or 20, people fear holding on to a stock at market open that it may just drop and they lose all their profit. So we're very concerned about this very first candle at market open. I never buy the first candle. Sometimes I don't even buy the second one if the stock is still pulling back. I wait until I see these indicators, this one and the one up here, turn green. I want to see the volume start spiking, and it needs to spike pretty strong. I'm not talking about, hey, it went up a little bit and it pulled back and it went up. I want to see some volume coming in.
Oversold.
So the only indicators I like on my chart is the VWAP, and I never make a trade when the price is below VWAP. We need that upward trend to happen and everything to be above VWAP, because once it comes down below VWAP, it's going to bounce around and probably continue to move downwards. So that said, let me click the play button here and let's see what happens with this stock and the pullback indicators. I never trade this first candle, this first 5-minute candle, and I'm on a 5-minute chart. That's the only way I trade. 1 minute is too radical for me. You'll get out with false movements. You just can't judge if red or green or red or green. I mean, it's just too many reds and greens for me, so I like to trade off of a 5-minute chart. So what I'm waiting for is, since the stock came up here, I'm waiting for profit takers. I want them to pull this stock back. And hopefully we'll get a green arrow. No promises since we got two here. And it's going to have to be a pretty strong pullback for the arrow to fire. So we're up above the body of these candles here. And that's actually, once it pulls back from sellers, this is actually the area that I want it to break for me to be interested in buying it. So to me, this is not a pullback right here. I want to see some red. I want to see some sellers come in and change the color. If the stock is strong, it will pull through the sellers because they're not trying to short the stock down. They're just taking profits. So it shouldn't pull back too far, maybe a minimum of here or a maximum. But I'm not really concerned about here. What I'm concerned about is I want it to turn around and break through this line. So we're hanging on. We're watching. I have a green indicator here and a green indicator here. The stock's trying to go up, but I don't trust it. I haven't seen any profit takers yet. I haven't seen the candle turn red, so I'm patiently waiting. So we still have green here. We have green here. And you can set your chart up this way. I usually put a few indicators on there because many of you use indicators in your trade. Me, I trade volume and volume spikes. The only thing I care about is it above the VWAP? So now we have some sellers coming in. They're pulling it back. We've got some red. We may not get down as low as this, but we almost did. So my next move is to wait for the price to break this high of the bodies of the candles in pre-market. If we can get past this and I see it continuing to climb, I'm going to get in as soon as possible above this high. Actually, the highs here, I call it the high of the body of the candles. So we're pulling back nicely. We got some red indicators. This is the spike, so it's a strong spike in that one candle, and overall volume is sellers. So I'm patiently waiting. Since I'm a scalper, I'm going to hit this pretty hard, and this is what I would do on a normal trading day. I'm only expecting a nickel or a dime, if I get lucky, 15 or 20 cents or more. So I'm in, and my stop is going to be clicking the sell button if I'm wrong. But very rarely does that happen if you wait for the right conditions. There is a chance it could pull back faster than you can get out. I've had that happen before, but that's just part of playing the game. So we're pulling back still. This is nice. I like to see this, people taking profits. I don't want them to do this while I'm in the stock, so I'm waiting. And I'm going to hit it heavy because I only want to catch that momentum jump when it happens. I don't even know that it's going to happen. I'm hoping that it happens. So if I get into a stock in the morning and I never break this barrier and the stock continues to pull back, I will look to see if there's another stock that may perk my interest. If there's not, I just cancel it for today and wait for tomorrow and start playing pre-market again and market open. There's enough profit into it to where you only need to trade 2 or 3 times a week. And it looks like we're turning around here. I want to see it break this barrier, this line of the body of these candles. I'm getting ready to buy if it comes up past it. And we're up it a little bit. I'm waiting. I'm not going to jump in. It's pulling back. And once I'm in, like right now, I'm going to get in. I'm in. And you should see this candle jump around and then shoot up. That happens when the momentum of everybody seeing it starting to rise, they'll throw some bigger orders in. So keep an eye on this candle and you'll see it flutter. Get out at the top of this big spike. Keep watching it. So far we're up about $400. Keeps pulling back a little. You can get out at any time. You don't have to hang on for the rest. I'm not going to. I just want to see that spike come in, like right there. I get another one. There it goes, and I'm out. So that's all I do when I trade the pullback strategy. I don't care what happens after this point. I've made $960 in a few minutes. If you do that a couple of times a week, that's probably more than most people get paid to work all week. So this is basically the pullback strategy. I've added some indicators to it. We can wait and see. But I've added a yellow arrow. And yes, I'm watching it rise, but it doesn't matter. I've got my piece of the pie right here. Some people call me crazy for trading this way, and I might be a little crazy, but I've learned to deal with it. So it's pulling back now. So I feel like I did good. I don't get to do this every morning because we don't have a trade like this every morning. But most mornings when it's happening, that's where I make my money. I don't sit here all day waiting for a stock to rise, hoping something wakes up during the day. I want to be present when all of these buyers come in. I want to be in the crowd. And if you're in the crowd, then you can play this momentum play as the rest of the people are buying it. You just want to play the spike. It was very strong up here. We had buyers down here. And really, that's pretty much all you need to learn. So back to the on-demand, make sure that each day you write down the morning gapper and the date that you wrote it down. It's hard to find stocks to practice with and on-demand. So each day, look up the morning gappers, write the date down, and 2 or 3 days from now, like probably, well, this is way back on the 6th, and we're already on the 12th, but on-demand is usually 3 or 4 days behind. So Friday, you might get Monday's gap up. So write them down each day, because to trade this strategy, you're going to need to practice. And you really need to practice till you're sick of practicing. That's how important this is. You're going to be putting your hard-earned money into these stocks. And if you're not certain that what you're doing is correct, don't waste your money. Once you become profitable and on demand, then you can switch over to live trading. And even at that point, I suggest getting in with small share size. Even if you just practice and made $10, $20, don't jump in there like I do. I've been doing it for years, and I can afford to take a loss of $1,000. Most people can't. But it's very seldom that I do, because I play 99% of the stocks this way. I look for the gappers, I wait for the pullback, then I wait for them to break this high of the bodies of the candle. And it's pretty much that simple. I hope you've enjoyed this video, and I'll see you on the next one.